Hi everybody, I'm back. It's been a very tumultuous year to date from January 1st till now. Price action has been all over the place, and I bet your portfolio isn't doing great. So let's figure out what the sharks are doing and let's plan ahead. Come to Remora TC to trade like a shark and not get eaten by one. Let's school together to protect and grow our money. You can see here the triple Qs. This is the NASDAQ 100 ticker that I tend to follow. On the screen is the weekly view. It goes all the way back to 2021 down here. I want to make sure you understand a couple of things. First, let's look at these purple trend lines. I'm going to zoom out for us. You can see from a time span perspective, the lower purple line goes back over a decade. Okay. And the main point that I want to highlight is that the type of analysis that I do, called technical analysis, follows trend lines and the psychology behind a trend line. When trades are made by the big institutions, they're programmed into computers, their algorithms and whatnot, behave in a certain way on certain trend lines. And when we're able to identify these trend lines, then we're able to get a glimpse in how the sharks and the whales operate. So looking at this trend line here for the triple Qs, the lower purple one, you can see it goes back a long time. And yes, it is an uptrend, but the point for showing you this is that when price approaches this trend line, it behaves a certain way. It's been using it as support. Okay, you can see it here. Back in 2011, here again, on this big drop, it dipped down at the beginning of the week, but then it recovered above the purple trend line. And again, it touched it. It used it as a kind of like a really strong floor, a foundation on which it can continue to move upwards in this bold fashion. Even in 2018, on this crash, or this drop, it used it again as support right here. Okay, and then when we got to our 2020 COVID drop, right, this drop here, let's look at this, remind ourselves how big this was. This was 25%, okay? 25%, 30% drop from that point. And you can see, again, price held on the purple trend line. So it bounced up there. Now you can also notate and observe that I drew an upward trend line that was also purple. It goes back a long time as well. And what we can see here is it was resistance above here in February 21, resistance again, but when price finally got above it, price started to use it as support. So when it came down here on the 19th of July, it used it as support. And once again here in this October timeframe. But then the key point that I want us to start looking at is when price breaks down and goes below the purple trend line. Okay, so it did so here on January 22nd, pretty impulsively with this big red candle. And the behavior of trend lines in technical analysis is, if they're always respected, then it's something for us to really keep in mind, because you can see it attempted to push through it a couple weeks later and it wasn't able to. And then even again on this date, the 4th of April, it tried to push through and wasn't able to recover that purple trend line. So now let's fast forward to where we are today. Okay. What I'm saying is this purple trend line, this top one here, is reliable. We can see that price again used it as support in April of 24, and again here in August of 24. But then observe what happened in the past 2 weeks. Okay. 2 weeks ago, price broke through and ended the week down here at around 423. Last week, price pushed through it. Okay. So you might say, one might argue that, hey, it looks like price for the triple Qs, the tech sector of the US market, is going to recover the purple trend line. But just looking at trend lines on their own isn't enough. We need to add a momentum indicator called RSI. All right, so you can see I added RSI down below here. And I want you to note the difference in how RSI's angle is drawn, okay, how the lines are drawn, because that's critical in how I do my type of trading. My strategy is based on technical analysis with an emphasis on momentum. And the momentum for RSI is based on volume and price. Volume is how many shares bought and sold in that time period, and the price that it was bought and sold. And that's key because when momentum changes, we can see it happen before price changes. Okay, so let me give you an example of here. Okay, so right here, the first time that the triple Qs hit, what is this, 435, was December 24, okay? So on December 24, that was the all-time high at 435. Now, the next time it got there and pushed through was weeks later, and it ended up being at the new all-time high. So price went higher. Okay, so if you were to draw this line here, let me just draw it right here. Okay, so price is going, actually let me use an arrow. So if price is going upward, okay, if you look down here in the momentum indicator for that same time frame, it's going downward, right? And so I'm going to put this pointer here. You can see the vertical line between December 16th. This is Monday, December 16th. Actually, give me a second here. I'm going to switch to the daily view. It's a little cleaner. Okay. So these arrows look kind of big. I'm going to delete them. And I'll explain it again. Okay. So here we are. The two all-time highs, right? Right here and right here. What I want you to notate is from this high to this high, okay, there's this upward sloping line. That's a key thing to recognize. It's upward. Let's make it fatter, okay? Okay, and then at the same points, right here down below is a downward sloping line. I'll get rid of this one for a second. And this one, in fact, I like to make it red. All right, so you can see it like that. So what I'm saying is, this is divergence. Divergence means that during this time frame, price was behaving in a certain way, whether it's going up or down. In this case, it's going up. Price is going up from 16 December to 18 February. But momentum was decreasing. The whales, the sharks, were starting to reduce the number of shares and the price that they were willing to pay for it. Now, we don't need to talk about the news because you listen to the news all the time. I bet you read the news, you watch other YouTube channels, your friends tell you about what's going on in the world, tariffs are going up, somebody is not buying something, other countries are resisting buying, products from another country. That's not what my channel is about. My channel is about scaling back, getting rid of all that extraneous information and looking purely at the technical data. The data, it's black and white. It's the data. There's no, you can't lie about data. Okay, so you can see the momentum change down here. So the key piece is momentum changes and then there has to be a catalyst. Okay, the catalyst will come. Just trust me, the catalyst always comes. the spark that triggers a big move up or down will come. And it came. And as soon as it came, you can see this big flush, okay? Because momentum was telling us that the whales, the sharks, the big guys, the biggest ones, not you and I, if we add up all of our dollars together, we cannot move price. You can't see it move. You can't see the ticker move. But it's got to be the big institutions, okay? They were offloading in this time frame. And sure enough, it continued. So you can see it happen here. So now, let's look at the purple trend lines again. This lower trend line was support for the longest time. You saw that. Just go back 3-4 minutes. You saw that. But here, you can see that it finally broke. And this is very significant, in fact. Price broke down over 3 weeks. Oh, sorry, this is days. 3 days, okay? April 4th, 5th, and 6th. It finally recovered on Wednesday the 9th. Big recovery. And then the next 2 days, the rest of the week, price didn't do a lot. It kind of hung around. So the big question that you should be asking is, hey, should I be happy? Should I buy the dip? Is this when I get back into buying triple Qs? Should I buy individual stocks like Apple and Tesla and the other tickers that are within the triple Qs? I would advise you, and I'm not an advisor, so let me rephrase. Scratch that. I don't want the algorithm to block my channel or whatnot. I am not a financial advisor. I don't give advice. From what I see, I think momentum has not recovered to the upside, meaning there is no bullish divergence below here, okay? I still see price going downward. If I were to grab this, actually I'll draw a new one, right? It's still downward sloping, okay? Because it's downward sloping, it is, let's see, what's the opposite of divergent? Convergent, right? It's convergent? No, it's parallel. It's parallel with the price movement for the triple Qs up here, which is also downwardly sloping, okay? So because they're both in parallel, there is no change in downward momentum, even though the price has gone up. This is a key concept, okay? Momentum will continue until momentum is depicted to change. Right now, momentum hasn't been depicted to change. It's still downward. So what does this mean? I know it's confusing. I'm going to try to make it as simple as I can. The whales and sharks are buying back in. They're buying back in because it was their opportunity to buy back in. And maybe they were hoping to get some retail investors to buy in as well. And as the retail investors start to see that it reclaimed the purple trend line, the retail investors will all jump back in, and then the sharks will eat them. So my advice to you, I can't say the advice, sorry. My, what I am teaching is that momentum hasn't changed. And for this style of trading, this strategy, the risk reward, this is too risky. There's the probability of price dropping below the purple trend line with vigor and ferocity, such that you will be holding the bag of crap will be high. So my thoughts for you coming into the next week or so for the triple Qs is this. I think you wait, okay? Don't buy back in. I'm not going to buy back in. Instead, if you're in triple Qs or tech stocks, maybe it's the time to take your profit, right? The risk reward is too great that it is now underneath this trend line, okay? It's underneath and it's sitting on it, but momentum remains to the downside. My suggestion for now is to wait on the sidelines. And if you want to lighten your load, as in, if you have 10 shares of triple Qs, maybe take a percentage off of it, okay? So that's triple Qs. Here's the NVDA chart. Everybody loves NVIDIA, especially my friend AD. AD, bless AD. AD got into NVIDIA down here. I'm going to highlight it here because if I was as smart as AD, I would have gotten in at this point as well. Let me see here. Let's use this price note at around here. Boom. Okay. 80's entry was beautiful at around 16. Holy smokes. Look at this. From 16 to where we are now. What the heck? 878% gain. Okay. So why am I bringing this up? Because AD asked me on this date here. Put it here. Shout out to AD. And this date is Monday. Oh, actually, let's go to the daily view because I remember the actual date. 28th of February, okay? 28th of February, AD asked me, hey, what should I do? I said, and I remember, I said, hey, you should lighten up, take your profits because momentum has changed. So let's look at the charts and I'll explain why I said that. You can see this beautiful long purple trend line for NVIDIA, okay? Price held support many times. But then when we got up here at the all-time highs, I'm going to switch to the daily view. Okay, all-time highs. All right, I'm going to get rid of this guy. Switch to at the RSI, so RSI is down there. And you can see that in this zone, which was the all-time highs in November, this little peak here, let me zoom into the peak here. Okay. So this peak of 7 November coincides with this spot right up here, okay? I'll highlight it. Okay, this zone. This zone is lower than this all-time high, which is higher. Okay, again, it's the same concept that I used in the other triple Q explanation. Price is going up, and momentum down here is going down. Okay, you can see that. Now, what needed to happen? Well, there needs to be a catalyst. So some catalyst came, as they always do, because that's just how the markets are. The catalyst will come. The spark that will set everything on fire. It came. And boom, price broke underneath the purple trend line. And you can see, for NVIDIA's case, that it's remained under the trend line. In fact, because there was so much divergence here, that price, let me just draw this up here. So it's like that. Let's make it green. All right. Prices, it kept going down. Okay, so now the question that AD and other investors like yourself, all of you love NVIDIA. Should you stay in or should you get out? Well, from a risk-reward standpoint, I prefer to think about how our money is put to use. When we invest, most financial planners, your Vanguards, your Fidelities, any of your big institutions where you put your money to invest, whether it's through your 401k or your ISA or through your company, they all tell you to use time to your advantage. You know, buy the dip and the market will always return. But from my perspective, it doesn't make sense to ride the roller coaster downward and wait for the roller coaster to come back up, right? If we look at the S&P 500, it took 2 years from the 22 drop to come back to the 24 to where it had begun to drop. So that it took 2 years to recover. Okay, 2 years of your money not being deployed and put to good use. So my personal opinion, how I would do things, is I would take my money off the table for NVIDIA right now. And here's why. We can see the downtrend, okay? It broke this purple trend line. It doesn't mean that there isn't a possibility for a different upward trend line. But right now, we have to look at the indicator. Does RSI down here, okay, does RSI down here have any upward sloping line that is divergent from the price line that's above, right? We can see price continually moving downward, but we don't see any different upward line. So here, I'll draw some more, okay? So if we compare, let's see, this here, price here, with this price, you can see it's going downward sloping, okay? And that aligns with this guy. It's also downward sloping. So that means it's the same, which is parallel. And same thing with this guy and this guy, right? It's still downward sloping. It's not like it's moving up, okay? And in fact, this one and this one down here, right? This one and this far one is also downward sloping. Okay, there's no little indicator that's up, but then there are some of you who are experienced technical analysts. You might say, well, hey, zoom in, John. Let's take a closer look. Okay, fine, we'll do that. I'll take a closer look because what is this little upward here? All right, so let's compare. So this here is the red candle. Okay, this is 4 April. And this one is 8 April. Okay, this is going up and this is going up, but they're both parallel. They're both moving in the same direction. There's no change in momentum. That's the key concept, momentum change. So what does this mean? Well, this behavior is the same as what the triple Qs were doing. The triple Qs moved up based on shark and whale purchasing stock, but not with the momentum to keep it going upwards. So what this tells me is it will also fail. I mean, NVIDIA is a huge chunk of the triple Qs. So it makes sense that the charts would look alike and behave the same. Okay, but the reason why I did this one was for AD, to give my suggestion from learning, teaching standpoint, right? If this was a textbook school exercise, one would lighten our exposure to NVIDIA and keep our money on the sideline, perhaps even go into a different stock and put the money to use while NVIDIA continues its downward trend until there is a momentum change. Okay, now we need to look at where we think the momentum might change. Okay, so I'm putting a couple additional annotations here to designate where I think there might be support. We can see support at this trend, this price point around 83, as well as support down here. There's double support here around 50. Okay. Now the reason why I think that we might go at least down to first to this 83 before there's a rebound, okay? And then maybe, I mean, it may take 6 months, 9 months, but ultimately you can see this 50 as strong support. There's some thinness here. Not a lot of institutions are buying between these two price points. That's why the gap's so wide. But what we should be very fearful about, if you're going to stay in NVIDIA, is that there's this big magnet here in yellow. I annotated this yellow to designate a gap in price. I'll zoom in for you. Okay. When price jumps like this is on May 23. When price jumps up like this, or drops down with a big gap, I consider it a magnet. And what that means is eventually that gap needs to be filled, and it will be filled. That's just how price action works. So what that means is there's going to be an opportunity in the future where I would buy in down here. I'm going to extend this a little bit because it's going to be a magnet. It's going to take a while. So this downward trend, may go down for a while, may go up a little bit, retest. It'll retest this trend line up here, come down, retest, and like use it as support. The idea is it will staircase down like it's been doing. And then once it gets below this 83, it's a big drop and it should be pretty quick because it's thin. Okay. So anyway, for now, shout out to AD. Consider lightening your load, putting your money aside, and then we'll together find something, a good opportunity to buy into something else. All right. The next ticker I want to do is the FTSE. What is the FTSE? Well, it is the English 100 stocks, okay? The biggest 100 stocks in the UK. And why is this significant? This is significant because some of what I've seen on the news lately has been informing us to diversify. You'll hear that word a lot. You need to diversify your holdings. It can't just be high tech. You gotta buy pharmaceuticals sometimes. Oh, and sometimes you need to buy oil. And you also need to put some money into gold. Oh, and Bitcoin. Okay, they all talk about diversification. That's the same way of training that all the other companies get. And all the financial gurus are taught the same way. Okay, tell people to diversify the type of things they buy. So one thing they've been saying is, hey, it's about time that we need to buy into emerging markets and the European market and other markets. So I said, okay, this is an interesting concept. So let's take a look at another market to see how it's doing. Okay, so here's this beautiful uptrend. You can see this. I'm going to go to the weekly here for the FTSE 100. Okay, beautiful uptrend from the 2020 lows. Beautiful uptrend. Two purple trend lines. You know how those work. Okay, support, resistance. If they break through, it's significant. But you can see it's been bouncing around these two purple trend lines. Got to an all-time high up here. Beautiful. And then the past 2 weeks, boom, it broke through the lower trend line. So then the narrative is put your money in other markets. Well, don't listen to these other analysts. Do your homework with me. Consider what I'm telling you and observe price action. And what would I tell you? Look at momentum. So let's take a look. All right, switching to momentum down below. Let's delete this one real quick. Again, observe upper price action is upward here. Okay, let's make it green. And then let's look below. Oh, I've already annotated it. Look how genius I am. Okay, you can see that the momentum indicator is already foreshadowing. It is telling us. It's like, do you salsa? Do you dance? If you dance, you know that the way that you move your hand or the way that you move your body, your partner knows what's coming next. Okay, it's a key thing of communicating with our bodies and with our moves, what's coming next. The freaking market is telling us this. The sharks are telling us. Okay, we are the remoras. We just attach to the shark and we just do what they do. This is what they're doing. They're saying, hey, time to lighten up. If you're in the FTSE, lighten up because we are selling. We are selling a lot. And you can see it. Okay. Now, not only did they sell a lot, they brought price back all the way down here to 7,500. Okay. So let's see, how big of a drop is that? all-time high to 7,500. That's like 15%. 15%, and then without changing momentum. That means it's not a momentum change. It's not a direction change. What they did was they bought price back up. Perhaps they or the retail investor like you and me, your mom, your dad, your uncle, your neighbor, who isn't informed about using technical analysis momentum like this and listening to this bald guy, they bought back in. But they bought back in and pushed price up to hit the upward trend line as resistance. It is now slapping them in the head. And what's going to happen? Because there's no momentum change, it's going to get rejected. You're not going to be able to break through. The FTSE won't break through. So what's going to happen? Lower prices will continue. Okay. If it does break through, because this is just the way it is, it won't stay up there for very long. So you've heard it here first. Okay. It won't stay up there very long. And then it will get lower. It will go down lower. It will go down below this, 7,800. And then the next support, which I've annotated here, about 11% down from where it is now, is 7,200. Okay. So if you're in the FTSE, consider what I'm telling you. Hey, you had a nice ride. I mean, check this out. This is a really nice ride. Let's go back to the weekly, right? If you rode it up from wherever this is, 6,800, hey, good for you. You have to know when to get out, put your money aside, and then deploy it somewhere else. All right? Check my notes here real quick. I'm so passionate about this stuff. All right, this video is really long, and I haven't done a video with my face on it ever before. It's taken a long time to figure out how to edit and do all these things. So I'm going to stop because I'm running out of energy. But I will do another video probably Wednesday or Thursday. And I'm going to put some other tickers in there because I definitely want to talk about gold. Okay, that's the GDX play. I want to talk about energy. I like to trade ExxonMobil. That's my energy play. And then everybody likes to talk about Bitcoin. So I'll talk about MicroStrategy. They just changed their name to Strategy. Fine. They are my proxy for Bitcoin. I've done really well with them this year, both on the downside and on the upside. So anyway, for those of you who have watched me before, you're familiar with my trading strategies on the downside and on the upside, making money in both ways. And for those who are new, welcome. That's all I have for now. Please comment. Let me know what you're thinking, what tickers you want to look at, if you want to talk about things. And good luck with your trades.